Okay, on your note, page 17. Remember, based on the direct method, we try to figure out the formula for indirect method, right? So today we want to talk about indirect method. So how to get the cash flow through indirect method. We finished the formula. We got the formula last week, right? When we talk about the direct method. So go to your note on page 17. So remember on page 17, where is our formula for indirect method? Right here, right? So for current assets, we use minus changing accounts receivable on your page 17. Also, on your page 19, we have the formula. Did you find out? Minus changing prepaid rate. So for current assets, what's our formula? We use minus, right? Okay, so that's for current assets. How about current liabilities? Through your page 20 to 22, you got the formula. Did you find out? Plus changing salaries and wages payable. Next page, did you find out? Plus changing interest payable. Also, plus changing income tax payable, right? So based on this, what's our formula? Current asset, we use minus. Current liability, we use plus. Okay? So that's our formula we are going to use for our indirect method. Any questions? Okay, so based on this, let's go to our slide. On your page 75. On your slide, page 75. So what we are going to do, we try to know our cash flow from operating activities, but we use the second method, indirect method, okay? So today we focus on indirect method only, okay? So remember, no matter direct method or indirect method, which financial statement you should look at, which financial statement first? Income statement, right? So when we look at income statement, then indirect method means what? We skipped all the process, each item, we skip it. We base on the final result and use the formula we got already, that we still can get the same result, okay? So indirect method means we skip all the process. We base on final result, net income, the final amount, using formula to get the net cash balance, okay? No problem? Okay. So go to slide 78. Go to slide 78. So did you find out? We look at income statement, right? So based on income statement, what's our first step? Totally the same when we use the direct or indirect method. What's our first step? We prepare statement of cash flow, right? In this chapter, we only care about cash, and the cash, right? So any information not related to cash, what should we do? Skip it, delete it, ignore it, right? So how about the direct method? Do you remember how we do for the direct method? For the direct method, on your slide, page 45, because the direct method, we base on each item to figure out cash inflow, cash outflow, right? So any non-cash item, you just what? Skip it, delete it, ignore it. That's it, right? So for remaining items, each item, you try to figure out cash inflow, cash outflow, cash inflow, cash outflow. That's it, okay? So the direct method, you skip any items not related to cash, right? So how about indirect method? Go back to your slide, page 78. How we could exclude any items not related to cash. How to do that? Remember, indirect method, we base on the final number, right? So final number is net income, but we have another option. Another option, the final number is income before income tax. Okay? So for our textbook, we tell you the first option. We base on income before income tax. This number, try to use our indirect method, okay? But for your problems exercise, we give you the second option based on net income. So you should understand, the final number, we have two options. First one is income before income tax. Second one is net income, okay? So we talk about first option right here. Income before income tax. This one is our final number.税前净利。So based on this is our first option. You could do it. To choose your final number, first option. 税前净利 income before income tax. Okay, so did you find out? Based on final number, income before income tax. So here, our start point is income before income tax, 税前净利 $395. Okay, so that's our option one. Based on income before income tax, 395. Okay, so since we choose income before income tax, 395 is our start point. Okay, so what should we do? Step one, exclude any items not related to cash, right? How? Look at income statement. Could you tell me which item is not related to cash? Which item? Payday expense, depreciation expense, game, right? So based on this case, we have three items. One, payday expense. Two, depreciation expense. Three, gain on sale of plant assets, right? So these three items, they are non-cash items. So non-cash. Okay, so we have three items, non-cash items. Could you tell me how to exclude their effects? How? The right method, you just skip it, right? But right now, could you tell me this final number, $395, include these three items, right? So based on the start point, like what? 1,000 minus 300 is 700. Then minus 100 minus 30 minus 10 minus 20 plus 5 minus 150, you got 395, right? So how to exclude their effect? So based on some numbers, you minus payday expense $10 minus depreciation expense $20 plus the gain $5. Based on this, then we got $395, right? Do you understand? So the other numbers, we minus 10, minus 20, plus 5, you got 395. How to exclude these three numbers items? These three items effect, how? Move to the other side, right? So means minus, plus, minus, plus, plus, minus, right? So that's how we exclude their effect. So how to exclude their effect? If minus, you should plus. If plus, you should minus, okay? So want to exclude their effect. How? Then, based on the start point, you should plus 10 plus 20 minus 5, okay? So based on this, we could exclude their effect. Okay, any questions? So step 1, always the same. Exclude any items not related to cash, okay? But here we talk about indirect method. So how? Minus, then you should plus. Plus, you should minus. That's how we exclude the effect, okay? So did you find out our step 1 right here? Payday expense, you should plus. Depreciation expense, you should plus. Gain, you should minus, okay? So what are we doing right now? We try to exclude their effect. Exclude non-cash items. Okay, any questions? So based on $395, we exclude non-cash items. Okay, any questions? So did you find out when we use the rate in the rate method, step 1, the same. We want to exclude non-cash item, but the method you are going to use is different, right? Okay. Okay. Any questions? Then step 2 and step 3. We have a step 2 and step 3 only because we have 3 big guys. Do you know what are these 3 big guys for companies? When you are going to pay the cash, who are the 3 big guys? 3 big guys means 3 very, very, very important. You borrow money from creditors. So we have to make sure you have enough cash to pay interest. Also, we got the cash from shareholders. So we have to make sure we have to pay the dividends to them. Otherwise, creditors, shareholders, they will be very unsatisfied, right? So we have to satisfy these 2. Also, what are the other one? Big guy. We pay the money to them. Government tax. So like what? Like next month, June, I should pay the tax to the government. But I don't want to deal with this thing right now. Why? Because I is so scared to find out how much money I had to pay for the tax, So because of these three big guys, we want to know how much money, what's the cash flow we have from these three big guys. Because of that, we have a step 2 and a step 3, okay? So step 2 and step 3 is only for these three big guys. So did you find out? We want to know the cash flow from these three big guys. So step 2, did you find out interest, dividends? Okay? So step 2, we exclude any items related to these three big guys. Okay? So interest, dividends. Maybe you will ask, hey, then why not tax? Remember, what's our start point? Right here. 395. Do we include the tax? Not yet. Tax is the next one, right? So for 395, this number, we only include 2 major items from these 2 major guys. What's that? Interest, dividend. Do we include tax? Not yet, okay? So that's why for step 2, we only need to exclude interest and dividends. We don't need to exclude tax because this number, 395, didn't include tax, okay? So step 2, we try to exclude the items from first 2 big guys. So what are first 2? Creditors, right? So this is creditors. This is your shareholders. Okay, so we try to exclude items from first 2 big guys. So first 2 is creditors and shareholders. First 2 big guys. Okay, so we excluded why? Because our focus on step 3. Step 3, you will note the cash flow from these 3 big guys directly. Okay, so we exclude the items first. Any questions? Okay, so step 1, exclude non-cash items. Step 2, exclude items from first 2 big guys, okay, creditors and shareholders. Why? Because we want to know the information from step 3. So what's the step 3? We want to know these 3 big guys' cash flow, okay? How much money I pay to the creditors? How much money I pay to the government, okay? How much money I pay to shareholders, okay? So step 3 is the information we want to know. So what is the information? We want to know the cash flow from 3 big guys. Cash flow information. So not only information, it's about cash flows. From 3 big guys, right? So what are these 3 big guys? Creditor, shareholders, and government. Why? Because you cannot postpone or delay any money to these three big guys, right? So like a tax, could I refuse to pay the tax? You cannot, okay? If I delayed the time to pay the tax, government will give me the penalty. I have to pay more tax to them. So that's why from step 3, did you find out? You can find out, oh, the interest we pay, right? Tax we paid, interest, dividends, okay? So from interest, dividends, tax, we want to know the cash flows. So step 2 and the step 3, we have a step 2 and step 3 because we want to know the information from step 3, okay? Any questions? No problem? So finally, after step 1, 2, 3, then what is step 4? You got the formula, right? We got the formula from the rate method. So what's the formula? Minus changing current asset plus changing current liability, right? So this is the formula we got from the rate method. Okay, any questions? So the formula you can find out from your notes. Page 17 to page 22, right? Any questions? So finally, from step 1, 2, 3, 4, we got the net cash flow by operating activity, right? So this number should be the same as the rate method, right? We use different method, but still, how much money you have, the cash flow should be the same. So this number should be the same as the rate method. Okay? Any questions? So option 1, this one, we have more steps. We have a step 2 and 3 from this one, option 1, because our start point is income before income tax. But it's quite common because for many of the companies, they will choose income before income tax as the start point. Why? Because they want to know the information from step 3, okay? So this option is still quite common, so that's why you should understand. First option. Also, later we will tell you the second option from net income. So start point from income before income tax or start point from net income. Both of them is quite common, okay? So you should understand what's the difference. Any questions? Okay, so based on this, please go to your note. Let's practice it. In the rate method. So on your note page 29. Oh, sorry, not 29. 26, page 26. So go to your note on page 26. Page 26, right here. Remember, all of your information is from page 14 and 19, right? 14 and 15. So did you find out? The start point, what's the start point right here? Income before income tax, right? So we start from income before income tax, okay? 税前净利 So what's our step 1? Exclude non-cash items, right? So what's our non-cash items? Right here. So this is our step 1. Exclude non-cash item. Okay? After that, what's our step 2? We want to exclude 2 big guys items, right? Okay? So what are these 2 big guys? Interest and dividends, right? Interest and dividends. So this is our step 2. Exclude creditor and shareholders items. Okay? So exclude step 2 because we want to know the information from step 3, right? So what are step 3? We want to know the information cash flows for creditors, shareholders, and governments. So you will find out interest, tax, interest, dividends, right? So interest you paid. So here we want to know the cash outflows. Received. So we want to know the cash inflows from these 3 big guys. Okay? So in the direct method, here our start point from income before income tax. So we have a step 2 and the step 3. Step 2, step 3 for these 3 big guys. Okay? After that, what's our last step? We use the formula, right? So what's our formula? Did you find out? Is what? Minus changing current assets plus changing current liability. Okay, so that's it. So from step 1, 2, 3, 4, finally you can get the result we want. So what's the result we want? We want to know the cash flows from operating activities. Okay? Any questions? If you don't have any questions, please finish it. Look at the information on your page 14 and 15. So look at 14 and 15. Finish page 26. Okay, how to use indirect method to get the cash flows. Try to understand it because when you take your final exam, I won't give you the tables, right? So how to get it? Don't look at the table. You should understand why. Because each item right here, I give you each item because I want to tell you the details. But when you have the final result, impossible, I give you the items, right? You should understand when, you should understand step 1, 2, 3, 4, and then each item, what's our job, right? So try to understand the purpose for each step. Don't forget the information you need from page 14 and 15, right? So page 15 is about income statement. Page 14 about your balance sheet, tell you assets and liability, right? So after you find out the start point on page 15, right? And finish step 1 from page 15 income statement. What are the others? The others you should look at page 14. Where? When you didn't find out the information, you just skip it. Right here, I present, I list all the items to let you understand. But when you really try to practice it, no information, you can skip it, okay? So here, because I want to show you the complete, I want to show you the complete situation. So I give you the each items. But for this case, we have maybe some items we don't need, okay? So just skip it, it's okay. Okay? Are you done? Okay, let's see how to finish to get the answer you need. The information you need is on page 14 and 15, right? So you should go back to 14 and 15. So based on the information on page 14 and 15, we should look at 15 first, right? Income statement. So based on income statement, our start point, which one? We don't have? Oh, sorry. Income before income tax right here. So did you find out the start point? Income before income tax, $192,000. Okay? So you just write down the number $192,000. Okay? Based on this, exclude any non-cash item. So what are these non-cash items? Depreciation expense and the loss, right? These two are our non-cash item. Non-cash, how to exclude it? Minus, then you should plus. Plus, you should minus, right? So depreciation expense, minus before. So right now, you should plus, right? Loss, before, minus. So right now, we should plus. Okay? So we done first step. So what's the second step? Any interest dividends items, we exclude it. So did you find out any interest dividend item we have? Here, right? Interest expense, $42,000. So only interest expense. Did you find out any others about interest, about dividends? No, so it's only one, right? So we have only this one about interest and dividends. Okay, so only this one. Exclude it. How to exclude it? Minus, then you should plus, right? So only one, $42,000. So plus $42,000. The others, we don't have the information. So how? Exclude it. Ignore it. The others, you don't need to care about it. Okay? Because we don't have this kind of informations. Any questions? So that's for step 2. No problem? So how about step 3? Remember, step 3, we want to know these 3 big guys. Cash flow, right? So first one is about cash inflows. Oh, sorry, paid. So cash outflows. So about cash, we pay for interest. Cash, we pay for the tax. So how to do that? You look at page 14. Page 14, you should find out their friends. So what are their friends? For interest, for tax. So here, did you find out? For tax. Okay? Did you find out interest? No, we didn't. Okay? So for interest, we didn't find out interest payable, right? When we don't have an interest payable, so means what? Means interest payable is 0. Means what? You didn't owe the interest, right? So since you didn't owe interest, means what? You pay all the money back to them, right? So what else you can find out the interest, the information? Interest expense, right? So you didn't owe any interest. Means when interest incurred happened, you pay the full amount, all the money back, okay? So what's the interest? Right here, right? $42,000. So you pay the full amount back to them. So that's why you don't owe them any interest, okay? So no interest payable means you pay all. amount of interest expense. Okay, so that's why here cash you paid is $42,000. So what are these $42,000? Is the interest expense. Okay, so it is the interest expense. How about how much money we pay for a tax? Then, did you find out income tax payable right here? Your income tax payable beginning 8,000, ending 6,000. So means what? Your income tax payable decrease, right? So income tax payable decreased $2,000. Okay, so means what? The money you owed to the government decreased, right? So the money you owed to the government decreased means what? You pay more or pay less? Payable decrease means you pay more or pay less? Pay more, right? So you pay more. Payable liability decrease means what? You pay more cash, right? So the money you owe will be decreased. Any questions? 可以理解吗？负债越少，表示你付的钱越多还越少？越多吧。Okay? So you pay more. So pay here. The tax you pay right here, you pay more. Pay more. How much? 2,000, right? So you pay more cash, $2,000. So you should go back to your income statement here. What's our income tax expense? $47,000. So based on this year, this period, I have income tax expense $47,000. But I pay more, right? So you pay more means what? How much money you pay actually? $47,000 you pay more. So your cash decreased 2,000 more, right? So it should be $49,000. Any questions? No problem? Okay. So for the other items, the interest you receive, the dividend we receive, we don't have the information. So that's why you could skip it because you don't have the information. Okay? No problem? Okay, last one. You just use the formula. So when I use the formula, minus changing current asset, right? So look at your page 14, current asset. So what are the current assets we have? We have 1, 2, 3, right? So I have 3 current assets. That's why. Did you find out? 1, 2, 3 current assets. Okay? So based on 3 current assets we have, so that's why we write down 3 current assets. Maybe you will ask, hey, why not cash? Because, of course, we know the cash. But what's our purpose? Our purpose prepare statement of cash flows. We want to know the details, right? So, of course, we don't need to use the cash again because the final result This is our final result. So we don't need to use it because this is the final result we want. But right now, the process we have is want to know the details, okay? So skip the cache because this is our final result. That's why we don't use it to calculate the details again, okay? Any questions? So based on this, minus, 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 right? Because our formula is minus, minus, minus. Then changing means what? Ending minus beginning, right? So what's the ending? Accounts receivable ending 20,000. 20,000. Beginning 30,000. Okay. How about inventory? 15,000 minus 10,000. How about prepaid rent? 5,000 minus 1,000. Okay, any questions? Minus ending minus beginning because that's our formula. How about liability? So go to your liability. How many liability we have? Accounts payable, income tax payable, right? So we have two current liabilities, accounts payable, income tax payable, okay? But why here we only use accounts payable? Why? For three big guys, interest, dividends, tax, we deal with that already on step 2 and step 3 already. So we don't need to take care about it right now on our last step, okay? So for interest, dividends, and tax, for these three big guys, interest, dividends, tax, for these three big guys, we've done already on your step 2 and step 3. Okay, so you don't need to take care about it again. So for any interest, any tax, any dividends, you don't need to calculate it again, okay? So that's why we have only one left, accounts payable, okay? So for accounts payable, PERS, don't forget, our formula is PERS. So we use PERS. PERS what? Ending minus beginning, right? So what's the ending? $6,000. What's the ending? $8,000. Okay, any questions? So we've done each items already. Okay, so that's how we find out the number for each items. Then you can get the result. Right here. Okay, from start point, income before income tax, and you look at each items. You could skip the others because we don't have the information. And we use the formulas to take care about the minus change in current asset plus change in current liability. So you got the result we need. Okay? Any questions? Take a break.